Welcome to the accendo-traders group. This is our weekend wrap-up trading plan for May 15, 2010. Our website is blog.accendo-traders.com, where we put together effective video technical analysis trading plans on a daily basis. What is our trading plan philosophy? Well, we break it down into 4 sections. The first thing we have to do is determine the trend. What is the direction of our trade? What is the direction of the market? Then we got to find ideal places to place our trades, to enter our trades, to exit our trades. So we're looking for our location. Ideal places, support, resistance, moving averages, pivots, whatever you use. And then we need a trigger. We know what direction we're going, we know the ideal place to get into the trade, and now we need a trigger using our indicators and market internals. And finally, we need to manage the trade. So, the week that was, well, the market ended up for the week. The Dow up 200, S&P up 24, the NASDAQ up 81. Certainly the NASDAQ percentage-wise is up more than the others this week. But in the end, we see that the market made a modest gain, but that's kind of tempered a little bit because of the recent declines we've had. All 10 sectors this week ended positive, led by the industrial sector. And we saw as the euro fell against the dollar, we saw a flight to gold, and it rallied to all-time highs. And also metals did great this week. I think gold is around 1235 now, so saw a flight to gold. Nothing much on the economic data front this week. We did have the retail sales for April up for I guess 0.4%, but nothing that really impacted the market. The main thing that was in our market this week was, once again, the overseas news. You know, at the beginning of the week, over the weekend, the EU did go ahead and enact a $1 trillion package to preserve the financial stability in Europe. You know, this is all about the Greece and Portugal and Spain debt going on over there. And that carried over here, and on Monday we were up 400 points. Volume was down, but that was because just how destructive last Friday was. But so that, once again, did take a big toll or big driver for the week. Didn't have a lot of corporate news this week as we were coming out of earnings seasons. We did see a little bit here with Visa and MasterCard. The Senate approved some legislation that's going to affect their debt transactions, so they went down a little bit. Next week, as far as on the economic front, you'll see that we really don't have anything that's going to jump out there and move the market. So, going into Monday, we can see that we don't have much going on again. Corporate news, we have Lowe's before the market. We do have Home Depot. Walmart would be interesting to see if Walmart has anything positive to say about the consumer. Now that Walmart doesn't report during the retail sales, there's a potential there for Walmart. A lot of splits coming back into the market, so that's certainly interesting as far as this stability of the market. So let's go ahead and take a look at our market internals and see what it's telling us. Of course, we're going to have a little bit of the internals being skewed by last Thursday's move here. You know, volume up almost 200%, 170% on that glitch day, fat thumb day, whatever you want to call it day. So that when we look at the NYSE volume and the NASDAQ volume for the week, obviously we see that they continually go down. However, when we look at Monday, when the market's at 400, even though we're still showing a decrease, we're showing a decrease of Friday. So the volume is still not even what it was of Friday. So we had huge volume last Thursday, last Friday, and then the big push up does not even compare to the Friday, not even including Thursday. So that's a little concerning. Also, we can see even on our big update, our put-call ratio still shows that the option players are still buying puts over calls, fractionally, but still interesting to watch. That continued on Tuesday, Wednesday, and Thursday. We died off a little bit there, but again on Friday, the put buying continued, and our volume increased. So the one day that the volume finally did go up, what happened? It was a push down day. So that's telling me that the market, the big players, are trying to push the market down, or they're jumping in on the move down, but we still have some, so that's why I still call this a distribution days, and those are the only ones that I'm really looking at, because when volume increased, they were down days. When volume increased, they were down days. The other thing we can see is that VIX, although it did go down just a little bit, on Monday and Tuesday, we headed right back up to the 30s. 30s is where I would be a little concerned as far as the fear in the market and volatility in the market, and the head to the downside. So there's a little part of me that's saying that the internals are saying that the market gathered itself. We pushed down, it gathered itself a little bit, and now it's thinking maybe we should go lower. That's what what I'm seeing. We can also see that our new highs and new lows are back down. For the first time, we had 3 days of stocks making new lows, and we had some new highs, but we're headed to possibly stocks making lows instead of making new highs. So that is concerning to me also. So internals, I think, have a bias to the downside. We're going to start off by looking at the Dow Jones on the daily chart, and the first thing that should come to mind is a couple things. First of all, the Thursday-Friday action has put in a lower high. We have our highs from the end of April, and as we push down with the hotkey, whatever volatility going up action there, we had a nice little rally, but our Thursday-Friday action confirms a lower high. If I shrink down to an hourly chart, what you'll see is that we had some action last week that was support at around 1009 or around 110 on the DGX, and you can see that our Friday action was not able to break that area. It became resistance for us. I could even come back to Wednesday and Thursday of last week and come all the way down here to 109. And again, Thursday we weren't able to break that, and so finally we pushed lower. So we have to keep that in mind. We have put in a lower high. So as I go back to the daily chart, the thing to keep in mind is we've already broken the January high, and now we have to hold on to the February swing low to confirm our uptrend is still heading higher. Now, if we go back to last year, we had a December consolidation area of about 102 and up to about 105. So that's one area that I'm going to be watching, especially the 105. You can even use the wick of Friday as an alert to see if we're going to break lower. We are going to see the same thing on the S&P. Again, we can see our downtrend line coming right on down. We can see the moving averages holding up now as resistance. You can see the 20 getting ready to break below the 50 moving average. All of that is bearish. The lower high is bearish. And again, as we go back to our December range, we can see a low of about 10,080, and the top of that consolidation was about 1120. So again, key areas to go ahead and put an alert to see if we break this 1120 area, putting an alert at the low of Friday. That certainly would be concerning and very good for our bears. But again, our indicators, the way the chart is setting up, is again putting a bias to the downside. As we move on to the education portion of our video, we're using the book Trade Your Way to Financial Freedom. And from our last time we got together, we talked about the fact that as you're following blogs, videos like mine, other gurus out there, the important thing is to find a common element and focus on those common ingredients as things that you need to acquire, skills, knowledge that you need to acquire. Find that similarity. But the last thing to determine whether or not you've developed a personal system is whether or not you have enough information about yourself. And the problem that many people make is that they buy these systems, but they can't trade the system the way it was designed because the rules of the system contradict who that trader is. You know, if you're not going to click the mouse when the system says it, then you're not executing the system properly. So is it a system that's wrong? It could be, but it's also the way that you're enacting, you're trading that system that is also wrong. So you got to find out about who you are as a trader, your risk tolerance, your capital management. You have to define who those are and then go out and develop a system, then go out and buy a system. You can't do the horse without the cart. You guys know we believe in futures trading. We got a great futures trading room for you. As we look at our partners, they did great this week. We got a current promotion of $100 off after the five-day trial. Of course, the risks are not results aren't guaranteed. You have to trade your own risk. And again, as we believe in the leverage of futures, we got a great broker for you. E-mini margins as low as $300, 20 free contracts if you sign up through us. A great charting platform for you. And we have a turnkey futures trading system that, again, help jumpstart your trading with futures. We love donations to keep these free videos coming to you guys. We got great videos on our YouTube channel for you. Follow us on Twitter, and you can get the full version of this video if you subscribe to our podcast. Of course, trade at your own risk, guys, and I will see you next time.